Thank you for joining me. I'm Alex, and I would apparently like to test out Google's algorithm. So we're looking at Aurora Cannabis today. And YouTubers don't like saying that name because apparently YouTube penalizes people for, having that in their videos. So what they do is they have jazz cabbage, and current price is $2.62, which gives them a market cap of $2.8 billion. Dividend is zero and will probably stay that way for a very long time. Current revenue $248 million, which is up 400% from 55 million. Earnings negative 291 million, which is down 500-ish% from positive 71 million, which gives them a PE of 9, which is obviously not great. Total assets $5.5 billion, which is up 150%. Total liabilities $1.1 billion, which is up 200%. And total stockholders' equity of $4.4 billion, which is up 200%. All those are rounded numbers. It went up from $1.9 billion. So obviously the balance sheet is getting better very quickly. That doesn't necessarily translate over to the earnings and revenue numbers. But revenue growing 400% is never a bad thing. Earnings, not great. But to sum that all up, obviously the sector is growing significantly, and there will be legalization of weed in the future. I don't know when exactly, but I cannot see it not happening. There's a lot of even Republicans wanting to legalize it, so it's going to happen at some point. It might not happen soon, but it will happen. So the sector is growing at a huge pace. This company is growing within the sector, and so there's a compounding effect that is obviously very good here. And I cannot say that they're not going to make a profit at any point in the future. So clearly growing the revenue so much will eventually lead to profits, because at some point you can just cut down the expenses by being more efficient, way easier than you can at the very early stages. And they probably rather grow right now, no pun intended, than try to make profit. So that's why it went from slightly positive to hugely negative. And I wouldn't expect them to make a profit for a fairly reasonable amount of time. So clearly they're in growth mode right now, and they should be, and that is not a bad thing. So revenue growth of 400% is obviously amazing. Earnings, losing more money than you make in revenue is obviously terrible. But I don't see that as a problem, especially with the assets increasing so much and the liability is actually not increasing that much. So the balance sheet getting better is a hugely positive thing. The revenue growth is a hugely positive thing. The lack of a dividend is par for the course at this point, and the earnings you're going to have to live with for a few more years, probably. So obviously, if you're a dividend investor, you're out at this point. If you're a value investor, you're also out at this point. The balance sheet is okay. The growth is amazing, but for a value investor, this is not a good investment. You want to invest in profitable companies, which this is not going to be for a while. You like to have a dividend, which this is not going to have for a long time. And so besides the balance sheet, there's not much to go for here. But if you're a growth investor, this is probably one of the highest growth companies that you could invest in. Now, the revenue is still fairly small, so 400% is hard to achieve once you cross like the $10 billion threshold. So getting there, however, you could probably join them. So in short, I don't see this as a very safe investment, and the political situation is kind of iffy at this point, but I do see the long-term potential here, and long-term, I really don't think that the sector is shrinking. I do not think that this company is going to fail to make a profit at some point. It's just probably not going to be significant soon. So with that said, if you're a growth investor, I think it would be good to look into this company, look into what they're doing and how they're doing it, and probably open a fairly significant position here, because obviously price to sales ratio of 10 is terrible, but that is compensated somewhat by revenue growth of 400%. So if they go like this next year, the price to sales is not going to be 10, it's going to be 2-ish, and after that it becomes reasonable very quickly. So I think that for a growth investor, this company makes sense. So make sure to do your research, but it looks decent. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.